Joining me live now for some more on this is Liberal MP Michael Sukkar. Thanks for your time today.
Hey Tom, good to be with you.
What do you reckon is going to happen to house prices
Well,
under Labor's policy?
Labor's all at sea. I mean, Labor doesn't know. What we do know, though, and we saw it in the Master Builders report, we've also seen it in modelling over recent years since they've announced this policy, the trifecta of consequences of this policy, which is clearly less jobs in residential housing, higher rents. We know if you remove negative gearing, it pushes up rents, because if you're a landlord, there's only one place to go to get the extra money, and that's the tenants. And finally, new home buyers will be locked out of new estates, the sorts of projects, or new apartments, the sorts of projects that have tended to be the province of new home buyers, because that'll be the only place left to obtain negative gearing benefits. So there's a trifecta of negative consequences. On the price, what we do know is the huge risk that this policy represents in taking what has been an orderly move, yes, at a period where we had high house price growth, but an orderly move back to normality, shall we say, to potentially a really hard landing. I mean, this would be the absolute worst time. I mean, if you were coming up with a policy, the worst time to implement a policy that was increasing property taxes, it will be now, where the market's already seeing a dip.
So you spoke about that orderly move, which has been house prices overall, driven mainly by Sydney and Melbourne, but going down.
Yeah, correct. But you know, our housing affordability package in last year's budget sought to do this. I mean, this was a deliberate strategy.
A lot of it was around APRA rules. I just wanted to put something to you, though, around that sort of, that what you call an orderly transition, because the Master Builders Association didn't factor in grandfathering. I think it's important to say that.
But this is a prospective policy. This is about what's going to happen.
Yeah, but it also, if you talk about supply and demand, then you're going to have a whole lot of 1.3 million at the moment investment properties on negative gearing are less likely to change
Tom,
hands.
Don't buy this argument from Labor. I mean,
well, it's not so much from Labor, but an economist will tell you that supply and demand's key, right?
There has been study after study which shows the consequences of this policy. We've got a real-life example, which is in the 1980s when Paul Keating tried to do this. He had to reverse it before it even really kicked off because it was so devastating. And now, for Labor to say they are going to implement this policy at the worst possible time, and also Jim Chalmers' concession this morning that it won't bring down prices, I thought this was a housing affordability measure. Now, what I had said when they announced this policy is this is just a revenue grab masquerading as a housing affordability measure. Well, today Jim Chalmers proved that.
Well, they've always said
Jim Chalmers proved it's just to raise more revenue, not as a housing affordability.
They've always spoken about a modest impact, which is what that FOI document out of Treasury suggested. This modelled the whole
Over
thing.
30,000 lost jobs is not modest in my view.
But from the Treasury bit, it talks about the policies could introduce some downward pressure on property prices in the short term, but it talks about a modest downward impact on property prices.
Speak to someone now whose mortgage is higher than the value of their home and ask them if they think a 9% drop in their a 9% further drop in the value of their property is modest. They will not tell you it's modest at all.
This is contested area, you'd have to say that.
I don't think it's contested at all.
Well, 9%.
Where's Labor's modelling? They've not shown us any modelling. They've hidden it now for 3 years. We've got commentators coming out like Robert Gottlieb's and saying this is the worst possible time to announce to bring out this policy. And what's the proposed start date? We still don't know what their proposed.
My understanding, it would be after the election, so that people, even if someone makes a decision, July 1 would probably be the earliest date given the financial year.
Well, if you speak to anyone in the housing market, that will be probably even a worse time than it is now to implement that sort of policy, if they were to be elected.
You'd probably have a little spike upwards, right, just when they implemented it, for people getting in, a little rush to get in while the rules, the ground. But that'd make sense, wouldn't it?
Not necessarily.
If you've got this great grandfathering option where you can get negative gearing and the CGT discount, only if you buy it before July 1, people would do that, wouldn't they?
Who knows, Tom, but we shouldn't be trying to develop policy that gives people arbitrage opportunities around the edges to try and make some money. This is a policy that is not going to have a modest impact on people. A 9% drop in their home, where it might have already dropped 5 or 6 or 7%, to the point where their loan is larger than the value of the property. I can tell you right now, that impacts so much in the economy. It's not just your house. I can tell you, Tom, if you feel good about the biggest asset you hold, you're confident to spend, it reflects in consumer confidence, and it has a cascading influence throughout the economy.
We've had a decent drop. $75,000 is the average loss of the overall value of a Sydney property, median property in the past year. Is there still, though, an affordability issue in Sydney and in Melbourne?
Yeah, there's no doubt there's still affordability issues.
So it could drop more and that'd be okay, as long as it's gradual.
In the short term, it can. This is why there's a cascade of really bad consequences. In the short term, what it can do is it can drive down prices immediately. In the long term, though, if it influences supply, which is what the Master Builders Report says, and Labor can't contest this, in the long run, it has a... No, they can't, because every single study shows the higher you tax property, the less investment you get into the sector, the less residential construction you get. That has a terrible outcome.
Except you also spoke about new home buyers being forced out of new projects, because that's where you get it. Surely there's got to be some impact. If all you can negatively gear is in new projects, there's suddenly incentive to build more new houses.
No, there's not an incentive at all to do that, because you've actually got less people competing in that market. So you know, in a sense, you've removed a segment from the market.
New home buyers are still in that market, and suddenly investors are being pushed into that market. That's more people, isn't it?
No, it's not, because they will have to retreat from the market. The new home buyers will not get a look in the new home market.
Well, but if they're not getting a look in, it's because it's more competitive, because investors are going there. That's more people going for the same property.
There'll be less supply, and there'll be one place for investors to get a tax advantage, and it'll be in a new property.
So that means investors are getting tipped into new... surely that means there's more people out there searching to get a newly built property, because investors are being pushed there.
But if you've got less being built to start with, Tom...
But why are there fewer being built?
Well, have you read the Master Builders
That's report? One report, but if you talk about...
Have you... I mean, report after report makes very clear.
Stocklands is another group that says it might have a big impact on increasing demand in that area.
No, they don't. If you tax property more, you get less investment into the market, you get less built. I've looked at this very closely, and you get less affordable housing built. I mean, some of the reforms that were part of last year's housing affordability package included huge investment into affordable housing. I mean, you'll get less money into affordable housing at that low end, which is, you know, subpar rent, and those who have problems getting loans from banks. I mean, Tom, the consequences of this are devastating, and I tend to agree with Treasurer Frydenberg, where he says, I suspect Labor will have to drop this.
All right.
I wouldn't be shocked if they dropped this on the eve of Christmas, because it is such a devastating policy.
They seem to be determined for the moment. We will see where it goes. I think it's certainly a watching brief. I'll agree with you on that. What about the energy policy? Labor indicating the most strongly, I think, so far today, they could adopt the neg for its emissions plan. This is something you guys were on board with not so long ago. Would you welcome that?
Look, Labor can't get around two facts. They have a 50% renewable energy target, and they have a 45% emissions reduction target. You can't get around that. Now, the consequences of both of those things, whichever framework it is, whatever it's called, whatever it looks like, is exponentially higher energy prices than under our plan. You can't get away from that.
The designers of the neg said it could be ramped up. They specifically said that.
Sure, at a cost.
Well, it depends on...
No, the designers of the neg said you can ramp it up at a cost. And the cost isn't to some unknown bureaucratic body out there. The cost is to the people watching this program right now.
Depending upon how technology goes, and there's also... No. We've also had Kerry Schott come out.
No, if they're relying on that modelling, it's very clear that, yes, you can ramp it up at a cost. And the cost is to consumers.
Kerry Schott says she thinks that coal-fired power plants will go out of business in Australia earlier than expected because of the lower cost of renewables. Tom,
that's fine. But in the end, yes, you can have a 45% emissions reduction target. Someone will pay. And the people that will pay are consumers. And this is why it's so telling in the Parliament at the moment. You've got the Prime Minister and the Energy Minister coming out and making very clear that we're standing on the side of consumers, not the big energy companies. And right now it seems like Bill Shorten and Labor have jumped into bed with the big energy companies. They don't want any punitive action taken.
Well, all they're saying is the ACCC said don't give divestment powers, and they're just saying they agree with the ACCC.
Well, lots of jurisdictions have divestment powers, and if you don't in the end have the big stick, If all you can do, if all Bill Shorten can do is write a nasty letter to the energy companies, they're going to completely ignore it.
All right.
Prime Minister Morrison saying we need a big stick. We're taking on the energy companies. Bill Shorten can choose to side with the big energy companies. That's fine.
The big stick, it's vernacular I'm still getting used to. I sense it's going to be used a bit more.
Fair income energy.
Yeah.
And that is exactly what we stand
Dispatchable power, also known as. Michael Suker, thanks for your time today.
Thanks, Tom.